Hello, everybody. Hank Miller with the Hank Miller team here. It's got to be 130 degrees out, and I just ate a couple of slices of buffalo chicken pizza. So if you see some sweating, it could be buffalo juice coming out. So, all right. I want to touch base on the market. It's January. My own. June 15th, 2022. Just putting that timestamp out there because the market has shifted, and this was shifting for a while, the real estate market, but now we have the data to show that it's shifted. We also have the Fed working their ass off to try to get this inflation, this transitory inflation, air quotes, under control. 4.69 a gallon of gas up the street, ridiculous. So the Fed had to put the brakes on things to try to calm inflation, and housing is in the middle of it. We're not the lead dog, but we're in the mix. And the impact of those rising rates has had a demonstrated and really a whiplash effect. And we'll touch base on what's happening in 2 seconds as soon as I hit pause and wipe my brow. All right, so a quick overview. In January, January 22, we were running about 3%. The Fed was talking about the bump. We knew it was coming. We didn't know to the extent that it was going to be, the extent of the hit. But we also didn't expect to have close to 9% or 10% core inflation, depending on who you believe. So now, this morning, rates are over 6%. And this is being recorded before the Fed increase for today, which is anticipated to be 0.75 of a point. That's already been baked into the stock market, which imploded yesterday. It's bleeding again today. So obviously the impact is hitting the real estate market. Are we going to crash? No. We're not going to see what we saw last time because we don't have the junk loans that we had last time. We have a lot of people paying cash. Excuse me. We have a lot of people coming in from outside with pockets of money. Atlanta's still a good buy. So the junk loans aren't there. The other thing that we see is better underwriting by the lenders. And we're seeing higher down payments because these buyers need to be competitive. So the risk to the lenders is limited. So I don't believe that we're going to see that crater that we saw last time with all the junk loans. But there are things that concern me. And again, after I wipe my brow, I will go into that. All right, so what concerns me? Here's what concerns me. Not the greater overall market with these purchases that were made. Many people paid way too much for their houses that they purchased over the last couple of years. But that pain's going to be self-inflicted, and it's going to be felt locally in that household. The lenders are not at risk. The people that I'm concerned with and that we're going to watch are these guys getting smoked by this inflation situation. There are just a ton of buyers out there, owners I should say, that are living in houses that make X and spend X every month. They don't have any fat on the bone. And when you start seeing gas go the way it is, and cost of commuting and cost of food, that is a stressor on a lot of these folks. And those are the guys that may have problems with making the mortgage payments. I hope to God this administration gets it figured out. Well, at first I hope that they pay attention to the problem and acknowledge that there's a problem. That doesn't seem to have been done yet. But I hope that they can figure this out. And it might take the Fed just literally beating this thing to death. And I have no ill feelings with the Fed. What are you supposed to do? But as far as a crater goes, as far as another crash, I don't anticipate that. But I do think there are going to be certain aspects in certain markets in certain areas where we may see some a little bit of an upset kind of a thing. Nothing cataclysmic, but that's something to watch. All right, so when we say the market shifted, the market changed, whatever, what exactly are we talking about? And here's the easiest example. We kind of saw it at the beginning of the year in January into February, certainly into March, into April, and in May it was like, what the hell just happened? Well, when we go back, real estate data trails, it's lagging. So when we go back in the data, we look. The number of contracts written in May was half the number of contracts written in April. And a lot of buyers have been running around trying to beat these rate increases. So what we saw was literally the brakes getting slammed on this market in May. Now, you may say, all right, graduations, everybody goes to Florida on over Memorial Day week. All true. So we need to see what June brings. But if we go by the contracts, this month is going to be very, very slow as far as closings go. And I can tell you my sense so far is more of the same. My buyers are frustrated. I see sales down. I see contracts down. So as we sit here roasting away in June of 22, the Fed today, we are anticipating, the market's anticipating a 0.75 point bump. I would expect rates are going to be 6.5 by the time the dust settles. Things are going to slow. Things have slowed. If you're in the market to buy, that doesn't mean there's going to be fire sales. Don't expect that. And we'll get into that on another video. If you're a seller, don't expect multiple offers. Don't expect the buyers to be giving you everything under the sun just to get your attention. Those days, I believe, are over. Is this a universal thing across every aspect of everywhere? No. Atlanta is a ridiculous diversity with real estate markets. And within those real estate markets, we have school districts, we have price points, we have home designs, we have smaller neighborhoods. Everywhere is unique. We can look at the big picture, and we have to develop some trends, but when we get into these micro markets, what's good up here isn't necessarily good down here. And again, that's why you need to have an agent who can dissect and dig in the dirt, because the trends here can be different than the trends here. Most of you guys know this stuff. So I'll leave it at that. If you guys have any questions, Hank Miller team, hankmillerteam.com, 678-428-8276, blah, 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 blah. It'll trail, and you'll have my contact information there. I'm going to try to knock out a video for buyers, knock out a video for sellers. That'll go into more detail for each of those guys, each of that segments, if you're interested in that. If not, I bid you adieu.